Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi, confirm that the voice is clear on your end, and then from there we can proceed with the session. Awesome. So today, being Monday, there's quite a number of things we will be expecting to be happening in the markets. And of course, we'll be doing a weekly overview. And at the same time, we'll try to understand what happened last week. So last week, we had some high volatility coming in from the ADP non-farm payrolls in the US, which came in stronger than expected, more than double the expectation, with the US creating 497,000 jobs in the private sector. However, when we waited for the official number, the NFP disappointed, and we saw volatility now happening in the other way around. So while the first volatility was as a result of a strong jobs report, which basically implied a strong dollar and weaker equities, then the NFP came in lower than expected, and as a result, we saw the entire trends reversing. So we'll be looking at that shortly. So for today, we will be looking at quite a number of things that we're expecting to see in the economic calendar. First things first, we will begin by looking at the key things that have happened early this morning. So Japanese bank lending year over year came in at 3.2%, slightly lower than expected, but within expectations. Current account came in at 1.70 trillion. This is slowing down from the previous reading of 1.9 trillion. Then Chinese inflation came in flat at 0.0%, which basically implies that China may be entering a disinflation period. So this is a period of time where Chinese goods and services are becoming cheaper rather than getting expensive. So producer price index came in at negative 5.4%, basically meaning that forward prices in China are expected to continue slowing over the next couple of weeks. So economic watchers sentiment in Japan came in at 53.6, and this is quite a good number, but a slowdown from the previous reading of 55. So going forward in the rest of the day, we don't have major news influencing the market, save for a speech by the Bank of England Governor Bailey. So this will be happening at 6 p.m., where he's set to speak at the Financial and Professional Services dinner in London. So investors will be following this closely, and I think it's the only notable event that we expect to bring volatility in the market today. So this basically means that today is a technical traders paradise. So we will be expecting to trade based on technical analysis without expectation of any big news causing volatility in the markets. So as we head into tomorrow, we'll be looking at the UK jobs market. That is the claimant counts change in the UK. Then we'll have the ZEW economic sentiment for the Eurozone as well as for Germany, before we look at interest rates in New Zealand at 5 a.m. on Wednesday. So then we will be looking at another speech by the Bank of England Governor Bailey at 11 a.m. on Wednesday. Then consumer price index for the US are still on Wednesday, and this is expected to be one of the biggest events for the week. So we will be expecting to see a lot of volatility here. Then interest rate decision by the Bank of Canada. This will be happening at 5 p.m. on Wednesday, where the bank is expected to hike interest rates by 25 basis points, eventually pushing the interest rates to 5%. Then on Thursday, we'll be looking at the UK GDP. We'll be looking at the core producer price index for the US at 3:30 p.m. on Thursday. And towards the end of the week, Michigan Consumer Demand Survey, and of course, the inflation expectation survey. So it's a week that is packed with news. We know how to treat those. So we will snapshot series. So day at 11 a.m. we'll be covering the events for the day. Besides this page, I think our earnings season is back. So the earnings season usually starts with the big banks reporting their earnings. And of course, this will be Q2 2023. So in this case, today, we don't have many companies reporting earnings. Only noteworthy companies is PriceSmart and WD-40. Then we'll be having Angio Dynamics as well as Milatnol. This will be happening on Wednesday. And then on Thursday, the biggest or the most anticipated earning will be Pepsi. So it is set to release its second quarter earnings ahead of July 13 open. Then the banks will be reporting on the last day of the week. So in addition to Pepsi, we'll also be getting earnings from Delta Airlines, then Conagra Brands, Fastano, Progressive, and Washington Federal. So Friday is the most anticipated day for earnings traders. So we'll be getting earnings coming in from JP Morgan Chase, and of course, we'll be getting other banks such as BlackRock, Citigroup, State Street, United Health Group, as well as Wells Fargo reporting on the same day. So this could bring the much needed volatility in the markets. At the same time, investors will get a view of how healthy the US banking sector is. And of course, we'll know whether the high interest rate environment is beginning to have an effect on our banking earnings. So this will be very important for the market this week. So now that we're through with that, it's time to look at a couple of charts here. So the very first chart we have here, just a moment. Somebody is saying my mic is not clear. Hopefully it's clear now. I've set mine to maximum, so probably on your side. So from the charts, this is what we are seeing. The Brent oil prices eventually broke this particular trend line and traded higher, especially on Friday. So today, what we are seeing here is the market attempting to make up some form of pullback, but we already have a clear direction. So from the forward chart, it's a clean break. So we expect Brent oil to continue trading higher, perhaps for the entirety of this week. So the FTSE 100 or the London 100 index has been trading downwards. So we will be expecting to see some form of pullback today. So as you can see from the 1 hour chart, there was a big drop happening last week. However, this week we could see some profit taking, market taking a step back. But overall, the thesis is that we could continue seeing some further downwards prices. So for the dollar index, there was a big sell-off happening on Friday last week. So today it opened with some form of recovery, but judging from what we have seen in the last 2 hours, it seems like the dollar weakness will continue. So as long as the Fed's objectives are being met, employment is slowing down, then the inflation number this week will confirm whether the Fed will go for another rate hike or whether it will hold. So chances are that inflation is going back towards the 2% target. And in that case, it would mean a weaker dollar. And this is what we will be expecting to be trading with today. So having seen the pound make a very strong rally last week, it basically managed to hit this previous high. And since then, you can see the price pulling back. And now in the last 2 hours, we are seeing the pound resume some form of strength. And these could potentially trade back higher. So Friday's high might be a nice target for any person who is looking to trade the reversal. So there is a good chance we'll be seeing the price go back to 1.28462. So as for Euro USD, it's the same thing. There was a big break happening here. The market pulled back down after hitting this particular high. So you can already see that this was a level that was tested before and the market was unable to break. So after this pullback, I may be expecting the Euro USD to continue pushing higher and then form another leg above this particular resistance. So for USD CAD, it's the other way around. So market makes a big jump downwards, basically the dollar losing to the Canadian dollar. Now you can see the dollar attempting to make some form of recovery early morning. And now as we get into the London session, there is a good chance we'll be seeing some form of continuation. So for USD card traders, I think this is a really nice and interesting point, which was the base of this pattern around 1.3 to 153. So there is a good chance we could be seeing the market continue to trade down this way. So as for USD JPY, remember our thesis has largely been the same, that the Japanese yen is fundamentally weak. So we have been trying to trade any form of pullbacks. So we did this last week when the market dropped here, and it eventually rallied to this point here, before pulling back down and making a very sharp drop during the news. So now we are seeing a very strong thesis where the dollar is really weak and the Fed could stop hiking interest rates. And this basically implies that the USD JPY pair is going to take a step back. So fundamentally, the interest rates remain strongly high at the US and very weak in Japan. So there is a good chance that we will be seeing a nice bounce happen from here. So while the prevailing trend seems to be downwards momentum, I would be looking for a setup to trend back up. So there is a good chance we'll be seeing this particular trend continue. So even though we have this drop, the last time it happened this way, it was like 3 consecutive days, and then the market picked up and started going up. So be on the lookout, just observe this chart. If there's any chance that there is a sign that buyers are entering such a market, then it will be a good opportunity to go for a long trade. As for gold, we saw this happening, market breaking this particular setup, going back to retest the area and then dropping sharply, and then making a completely opposite reversal. And this was during the non-farm payrolls. So since then, the market has pulled back downwards and the chart is not looking good. So this is not the chart that we normally say this is a proper setup. It seems quite noisy to me with very big swings. And now what I can see in this chart is some form of conference along that level. And then on this other level, it seems like the market was moving this way. And now it's moving the other way around. So after forming this bottom, and then there's another bottom here. So this is what we are seeing happening in the chart of gold. And of course, we cannot ignore the most recent low. So this area here seems to be holding on quite well. So as for today, if you look at this chart, you'll notice that the market has not yet broken Friday's high, neither Friday's low. So we could be seeing some sideways momentum happening in gold, or rather some form of consolidation before we determine our direction. So there is a good chance we won't be seeing much volatility happening in gold today. So for AUD/USD, early this morning, you can see the Australian dollar being really strong against the US dollar. It hasn't yet hit our target. So the key or the critical level is 0.66365. So there's still some more room for some further downside before we determine the next direction for the AUD/USD pair. So most interesting assets for the day seems to be US equity indices, which were largely selling on Friday. So they went up and then they sold towards the evening. So today seems like a continuation, say for the last 2 hours. So for the NASDAQ, for the S&P 500, and of course for the Dow. So it seems like a similar story. Then the last 2 hours are indicating some form of support, and the market is pumping back higher. I still have a bearish bias for the equity indices, especially judging from the price action. So for the NASDAQ 100, you can see this was a double top formation on the 4-hour chart. So we will be expecting to see some further downside towards the neckline. So in this case, there's a good chance that the NASDAQ continues selling and perhaps even gets to this particular bottom around this area. And this is a 14,687 price level. So for US 500, it's also another double top formation. So the target now remains at around this area where there's the neckline, 4,328. And of course, for the Dow, which has been the weakest, it has already completed the double top formation. So now we'll be observing whether there's a break below 33,605. So for Brent oil, as I've already mentioned, yes, we have a clean break. So this pullback will only prepare us for another strong bullish position. So that's it for the day. If there's any question, I would like to check them up before we close. So I missed the BOE speech over the weekend. What was the crux on his speech? I'm sorry, I also missed that too. Over the weekend, I wasn't able to check on the markets. Another comment here. Appears the OPEC second day conference did not end up with heavy hitting news on production cuts, other than what Saudi Arabia committed. Yes. So overall, we didn't see an agreement from the OPEC countries choosing to go for another cut for oil output. Instead, what they merely issued was a threat. So besides what Russia presented, which was 500,000 barrels per day cut in oil production, other countries in the OPEC did not commit much. However, they issued a very strong threat that they are willing to do whatever it takes to make sure that they support oil prices. So the threat was sufficient enough, combined with the CPI news, combined with the NFP news, to cause a big break in the Brent oil prices. Please comment on a case where NFP comes out conflicting with unemployment rate. Which of the two does the market react to? So the unemployment rate is measured year over year. So we are looking at the number of unemployed people over the entire labor force compared to the same period last year. So the non-farm payrolls, on the other hand, focuses on the number of jobs created in the private sector in the last 1 month. So the NFP tends to have a higher impact because it gives a broader or a better picture of the current level of the economy. So now everyone in the US is focused on the number, and the fact that it came in lower than expected, now we will be expecting the Fed to pause the rate hikes. And of course, one more data point is expected, and this will be the US CPI happening this week. So on inflation data, what is this that Fed wants to push 2%? Is it core CPI or the core PC? It's the overhead CPI. It's just the CPI, month over month CPI. So they want to make sure that year over year, the rate of change in the general consumer prices in the US is at 2%, meaning that the overall price of food, transport, and the entire basket of commodities is only moving up by 2% in a year. So they look at the annual CPI and try to reduce that to 2%. So in the current reading, it was 4.0%. So we will be getting an update later this week on whether that inflation is dropping below 4% or whether it continues rising. So from Lucy, she's asking we check on USD CAD. I think we've already done that on USD CAD. Yes, we identified that there's a good chance we'll be seeing some further downside. So if the dollar remains weak for the rest of the day, then we could be seeing the USD CAD drop to this particular level, around 1.32153. So on the flip side, if the dollar happens to regain strength today, then the target, of course, will be back to 1.33562. So chances are, from what we are seeing with the dollar index, if it remains weak, as we have seen last week on Friday, and continues pushing further back downwards, then it would basically mean it's also weaker against the Canadian dollar, and we continue seeing prices dropping here. So is the Bank of Canada going to tighten after the 5-month pause? The market is pricing in a rate hike. This is as a result of inflation being currently stronger than expected. So in this case, we could be seeing the Bank of Canada push interest rates to 5%. So that's what we will be expecting during the announcement. So there's two questions clarify on gold. Will gold move higher? So as I mentioned, most of the time whenever we are having these sessions, the charts are usually very clear, and it's sometimes easier to tell where gold is headed or not. But today it seems more of a market that may be moving sideways. So we tend to have this quite frequently, where gold makes a big jump downwards, a big jump upwards, and then for the rest of the period, you see it trading sideways. So my thesis is that we could be seeing gold just trading sideways until we have the next trigger movement. So observe this carefully using, let's say, a smaller time frame, and then just observe the oscillations maybe between the two trend lines, maybe this high, and of course, this other low. So I don't expect much volatility to be happening in gold today since we don't have any news. So just some small momentum happening within the two trend lines. This is a 15 minutes chart, some sideways momentum before we actually get some good trigger forcing gold to move in a particular direction. So that's it for the day. Thank you very much, guys. And I hope to see you on the next session.